and thanks for being here at this great event. Thanks, David, for hosting. It's awesome, and I can't believe David does this for 3 days in a row, and he records everything so quick and it's so organized. It's really awesome how you do it, David. So thanks to this, kudos to that, and I'm super excited, stoked to be here, and I hope what I'm going to show you guys is going to fit right in with the topic of this all day or all 3 day webinar. It's about trading psychology and time management. Now, what I will show you today, well, first of all, help you to simplify your mind. I think lots of trading is really about keeping things simple and being able to distinguish what is noise and what really matters on the price chart. And we have come up with a system, it's AI based, which will highlight directly on the price chart the important, we call these landmarks on the chart. And once you know what these landmarks are, estimate how price will react to these levels, these landmarks, and then set up trades accordingly. And this is what this presentation is all about. But before I start, let me maybe share a bit of information about us. So we are TradingIndicators.com, and we are based out of beautiful Montreal, where it is mostly cold all year long, but except for the summer months. The summer is just about to start here in Montreal. Things are getting nice. I look out the window. It's a bit cloudy, but spring is finally kicking in, and it's always the relief after a long, long winter. It's finally getting warmer. So yeah, we are Montreal based, and my name is Daniel, and I believe my background perhaps is different from the typical trading educators that you may listen to in these presentations. My educational background is in software engineering and all in software engineering. And for the longest time of my career, the objective of my life was my career objective was to become a professor in software engineering. So I went through all the hoops. I did my master's, my PhD, a postdoc. I started teaching at various universities in Montreal, in Germany, where I'm originally from. But you know what? At the same time, I was always fascinated by the world of trading and finance. So I started trading on the side. As you start out, you make lots of mistakes, and I made the same mistakes. I overtraded. I took too much risk, way too much risk. I traded when market conditions were not right. And after donating quite a bit of money to the markets, I came to the hard realization, man, trading is complex, and I need help. And for me, needing help meant, hey, I need better tools, better indicators, which will help me make better trading decisions and which will help me simplify trading. And this is exactly what I'm going to show you today. And the indicators that you will see today are the ones that we use in our trading every single day. So we really put our money where our mouth is. These are not made up indicators. These are indicators which I'm going to show you, which we use in our own trading. And how we do this, we're going to share it or look at together today. All right. We've been out there for quite a long time now, for more than 10 years. And over the years, we have built more than 700 trading indicators, fully automated trading strategies, trading dashboards, trading scanners. And our team has grown from, first me just being me at the beginning, now to also having Homer on board. Homer is my sidekick. I actually met her at grad school here in Montreal. We were in the same research lab together. She was doing a PhD at the time. I was doing my master's, and over the years, we've started multiple companies, but trading indicators has been by far the most influential one. We also have Nicholas on board. Nicholas is our star programmer. He has developed most of our more recent indicators for Thinkorswim, for NinjaTrader, and for all major platforms. And a couple of words of who we are and what we believe in. So we strongly believe in what's called technical analysis. And thanks to the efficiency of today's markets, we believe that fundamental information is almost always immediately priced into your chart. And by doing a technical analysis of your chart, you will indirectly also take into account fundamental information. This doesn't mean that we ignore fundamentals at all, but mostly when we look at fundamentals, it's just to time our trading and to decide when it's a good time to trade and when it's better to stay at the sidelines. For example, when big news events are being released, these are often moments of high volatility. High volatility oftentimes means unpredictability and increased risk. And to us, assigned to perhaps stay on the sidelines, let things calm down, and then continue trading. We also strongly believe that trading should be simple. And you know what? Trading is simple, but you need to know what to look for. And my objective today for this presentation is to show you what we are looking for on the price chart. We call these landmarks, and how price is likely to react to these landmarks. We also believe that good tech and good indicators can make your life easier, and especially your trading life, because they can do most of the heavy lifting for you. Because in trading, and now it goes back all the way to time management and psychology, trading is all about channeling your energy to what really matters. It's not really the cumbersome technical analysis and groundwork. No, it's a decision of whether I want to get into this trade or perhaps want to stay on the sideline. This is where you want to, channel your energy on, you focus on. You don't want to go exhausted into this decision. And we have developed indicators which will take away most of the heavy groundwork, of the tedious work, so that you can focus on what really matters. We also believe in teamwork, not just among ourselves, but also for our trading community. We have built a rich trading community, the trading indicators community. We interact for our community on Discord every single day. We exchange ideas. We get so much valuable feedback from our members, which has helped us to further improve our indicators over time. And many of the indicators that we have in our store, which is TradingIndicators.com, they are now in our version 11, 12, or 13, improved over time thanks to the feedback of our members. But enough about us. Let's get into it. And of course, I need to remind you that if you trade Forex or futures or stocks or options or really any asset class, you need to know that trading does contain substantial risk and is therefore not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you can actually afford to lose. And it should not affect your lifestyle if you actually lose it. When it comes to hypothetical performance or backtest performance or anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas shown in this presentation should not be construed as trade advice. These are for educational and informational purposes only. All right, so with that out of the way, with the lawyers being happy, let's get into it. All right, so about 1 year ago, maybe a bit more, we have made a fundamental observation. And we have discovered that any chart, be it a 1-minute chart, be it a daily chart, be it an FX chart, a stock chart, a futures chart, all these charts, they have landmarks. And these landmarks are zones of price, levels of price, which have certain properties. And if we know where these zones are, we can estimate how price will react to these levels once price approaches these levels. And we can set up trade ideas around that. And this was an observation we've made because we saw these zones everywhere. It didn't matter. And we have decided to build an indicator around this principle. But let me back up a little bit. All right. So first of all, looking at the naked chart, charts oftentimes tend to be unpredictable. We can look at this chart here where price was originally trending up. Yeah, it's trending up, but then soon the trend reversed to a downtrend, and price went down again, then up again, then down again, and so forth. So seemingly there's no really any discernible patterns on those charts, and things get even worse if you look at smaller time frames. So charts really tend to be filled with a lot of noise, but not everything is noise. Some levels are actually important. But let me explain one more principle. On these smaller time frames, things tend to be worse in terms of unpredictability than on the higher time frames. So on the 5-minute chart, which is a fairly small time frame, things tend to be really erratic. You can see it here exemplified. But when you zoom out, when you increase your time frame, for example, to the 4-hour time frame, things tend to become a little bit more clear. And this was one fundamental information that I want you to keep in mind because it will become relevant very soon. So things tend to be clearer and more obvious and more clean once you zoom out on your time frame. All right. Now, I mentioned before, every chart has landmarks, and these landmarks can be established by various events. It could be, for example, a historical high. Price made at the time an all-time high. This can establish a landmark on the chart. Landmarks can also be established by lows or swing lows, which are revisited multiple times. You can see it here. A swing low, a swing low, and a swing low. And these landmarks have a very interesting property, which we often refer to as a magnetic property, meaning that price in the future is likely to revisit these levels. So price may return after some retracement to the historical high, or a low which was revisited many times before, because there's some significance of these levels. Now, these landmarks are often referred to as support and resistance zone. I believe a concept that most of you are familiar with. People talk about this. There's prices approaching support or resistance, and once support is broken, it turns into resistance and stuff like this. So we've heard it all before, but let's try to make sense about these levels from a very pragmatic point of view. All right, so what does support and resistance actually mean? Well, when we have excess demand, there's more demand than supply, this creates a support zone, meaning that price is unable to drop any lower. It can't, because we have more demand than supply. Price will not continue any lower. And the same for supply. When we have excess supply, more supply than demand, price will not be able to move any further. And this is what creates, when we have excess demand, support, or when we have excess supply, resistance. But this is more going back to the basics. But we're going to bring this back to something very pragmatic in just a second. Now, we can spot these areas of excess supply and excess support quite easily on the chart. Look at this chart here. Look at these three swing lows, where price tried to approach this level, it wicked down, and then bounced off from it. Then once again, it came down to this level, couldn't penetrate, couldn't go any further, and went up again, and here again, and went up again. These are areas of excess supply, a support zone where price has difficulty penetrating. And typically, these are areas where big players, the organizations, the institutions are stepping in with big block orders, buy block orders, preventing price to move any further down. Same for supply, for excess supply. When we have excess supply, we oftentimes see these, swing highs, which are revisited over and over again. These are areas of price where big sellers, block sellers, are stepping in from the institutions, selling their positions, preventing price of moving further up. Instead, price will pivot and move down instead. So we can spot these on the chart. And oftentimes, these levels, they are created by the big players, the culprits, the big money traders, the institutions. We as retail traders, we cannot create these levels. So these shots are called by the big players. But what we can do as retail traders, we can follow the patterns and create trades around that once we know where these levels are. All right, so these levels, when accompanied by increased volume, abnormally high volume, these are often also referred to as what's called liquidity zones. And there's a reason for this, because in these levels, liquidity, the trade volume, is exceedingly high, and big players can get their big money block orders or block orders filled at these levels. This is why the term liquidity zones comes from. All right, so if you can spot these levels of price, we can estimate how price will react to them, and we can, create or set up promising trades around that. Now, the question is, how can we spot it, and what could these trades be? So here's an example of such a trade. Look at this chart here. Price is approaching this support zone down here. It wicked down a couple of times. You can see it here. Couldn't penetrate it. And instead, price bounced off from the support level and moved towards the middle, in between support and resistance. And you can probably very easily imagine how you can formulate a trade around this. Now, the trade would fairly obviously be to go long once price wicks down into these levels, put your stop loss somewhere below support, and anticipate that price, instead of moving further down, will move up instead. And you can profit from this. Here, another example. Eventually, every zone is broken. Price will not forever wick down into a support zone. Eventually, it is likely to be broken. And we can notice these events as well. Because once price breaks support to the downside or breaks resistance to the upside, we oftentimes see a big follow through. So you can see it here. We have a zone break and price then continues in the direction of the break for quite some time. Once again, a fairly obvious trade setup. Once you have such a zone break, you would enter in the direction of the break and put your stop loss just a bit above the broken zone in case the zone break doesn't hold. And one more example of a very promising trade that can be done once we know where these levels are. We call this the breakout retrace trade, something that we see over and over again. I'm going to have a lot of chart examples today showing this as well. Once a zone is broken, so here we have a zone break, this resistance level was broken to the upside. Price initially followed through. It continued in the direction of the break, but then retraced towards the broken zone, the broken resistance level, which will now act, guess what, as support, preventing price from moving any further down. And instead, a price will then continue in the direction of the original break. And once again, once we see these patterns, this retrace patterns, the setup is fairly obvious again. We will enter in the direction of the previous break, put our stop loss just below the this now level which acts as support, and hoping that price will bounce off from it and move in the direction of the original break. So these trades, they seem quite obvious. But of course, there's one precondition to them. We need to be able to find out where these important levels are. And we have spent the good part of last year developing an indicator which specializes exactly on that. It will find for you exactly these important levels of support to the downside or resistance to the upside. But in fact, it does much more. We call this as the instant charting assistant, because it will use AI technology to not only annotate your chart with these important levels, but it will also point out important events such as zone breaks. Now, once a zone is broken, big things may happen, or liquidity captures, which are often reversal points. Additional evidence that price is not going to continue any higher. We have a liquidity capture, big orders are stepping in, preventing price from moving higher in this case, if it's a capture to the upside, and price will reverse and continue to the downside. See these little shaded areas? These are liquidity captures. Once we're down, we may get liquidity captures near support zones, preventing price from moving any further down, and instead it will go further up again. And you as a trader, you can probably imagine how you can take advantage of this kind of information on the chart. Now, you can, if you want to, figure out where these levels are by hand, where these liquidity captures are, which are levels of increased volume. But believe me, it is super, super tedious because it requires a multi-time frame analysis. Looking at the same time frame may not do the job well enough. So you have to look at multiple time frames. You need to consult volume data and so forth to figure out all these things. It's super tedious. And remember, when I said at the very beginning, trading should not be tedious. It should be simple. And all this heavy work, these annotations, this is tedious groundwork, which you don't want to occupy yourself with as a trader. Because as a trader, what you want to be focusing on is to pull the final trigger. Should I go into a short trade here? How much should I risk? How big should my position size be? Where should my stop loss be? Where's my target? Now, these are the important decisions. I'm not annotating your chart. And simply by being able to preserve your energy when you are freed from all the groundwork can make a huge difference in your trading. But enough about theory. Now let's get practical. Let's talk about how can we spot these zones on a price chart. So let me switch over to the charts. So I'm going to open up TradingView. All right, just drag this one in. Okay, so here we have a TradingView chart. It's a naked chart, no indicators are displayed on the chart yet. And it is a chart of the 5-minute crude oil or micro crude oil futures. All right, but before I go any further, a quick remark that whatever you're going to see now will work on any major trading platform, not just on TradingView. So our indicators will work on TradeStation, on Thinkorswim, on NinjaTrader, on MetaTrader, and so forth. So all major platforms are supported. It also doesn't matter whether you trade or day trade the futures, or perhaps you're more of an investor and swing trade equities, or you trade FX or cryptos. It doesn't matter. These indicators will work on any asset class as well. All right, so let me ease you in, because what you're going to see now will be, it has a lot of features to offer, so I want to ease you in. The first thing I'm going to show you is a basic version of our liquidity IQ indicator, the indicator designed to show you all these important levels and events. So I'm going to enable it. And in its base version, what you can see here are, these levels. So you can, for example, see a level of resistance on top here, or a level of support, which ended at this point, and here a new level of support. You can see it readily on the chart, directly annotated by the indicator. And whatever you see here is not painted after the fact. For example, this level of resistance up here, we knew, or the indicator knew about this level and displayed this level all the way back here when this line started. This is where we knew where this level of resistance was. And look how price has reacted to this level once it approached it. It approached resistance, couldn't penetrate it, and bounced off. Now, once again, it's the 5-minute chart. It just happened. I didn't even look at the chart yet. It bounced again, or moved towards this level, could not penetrate yet, and bounced off again. It's like a magic property. It just went up to this level and bounced off. You may have been able to infer these levels somehow by the naked eye, but maybe not so easy. But once the indicator is on it, it is very easy to estimate what price may do once it approaches this level, or down here at support. Multiple times price, once broken, price approaches support, bounced off. Here again, look at this big candle. It bounced off, it went down, it wicked down, bounced off support, and went higher up. So this is the first thing that the indicator does. But it continues. So, and by the way, guys, I forgot to mention this at the beginning. If you have any questions or any chart requests or anything in mind, please don't be shy. Put this into the chat box, and I'll be more than happy to answer all your questions. So the more, the merrier. Okay. All right. So this is the very basic version of the indicator, but let's make it a bit more complex, more fun. So I'm going to go into the settings. And the first thing I'm going to enable is what is called mentor mode. Mentor mode is something we've developed which will help you to make sense of what you see on the chart. Basically, annotations on your chart, helping you understand what's going on. So for example, let me just zoom out a little bit, make this, or zoom in a little bit. You can see here that this resistance zone, this zone here, has a range between 79.16 and 79.20. Or the support zone down here has a range of 76.92 and 76.88. Or here, we had an event of a liquidity capture. An event which has extremely high volume, and it occurs near a support zone. And this is oftentimes a telltale sign that, hey, something is up. Big money block orders are stepping in, buy orders are stepping in, preventing price from moving further down. And look what happened here. Price wicked down to this level. We did have a liquidity capture event, this price level, and then price bounced off from it immediately and moved to the upside. These are these shaded areas on the chart. These are areas, when they happen near support zones, they are shaded in a red color. Or if they happen near a resistance zone, they are shaded in a greenish color. Events of extremely high volume. And if these happen near support or resistance, a reversal is likely. You can see it here. We had liquidity capture, price went down. Here again, just recently, a couple of, maybe half an hour ago, another liquidity capture, and see how price initially moved down. It couldn't penetrate this level. And believe me, you already see how you as a trader can take advantage of this kind of information. All right, what else do we see? We also have zone breaks. So zone breaks are event where eventually a level of support is broken. And I mentioned in the beginning, once this break happens, oftentimes we have a nice follow through. You can see it here, these little arrows. These are areas of zone breaks or events of zone breaks where in this case support is broken. Or if I go further back, in this case here, a resistance is broken. Sometimes, we have a zone break and we don't have a big follow through. It can happen, especially when it's accompanied with liquidity capture events. But look at these levels here. Price went down exactly to this level, which we knew about all the way back here, and then up to this level, which we knew about here. It's oftentimes quite magical how well these levels reflect what price may do in the future. All right, but there's one more thing I want to show you. Actually, two more important things, then we're going to move on to a different chart. Remember in the very beginning of this presentation, when I told you or talked about this observation that we made, that things tend to become clearer when we zoom out, when we go to a higher time frame. We have decided to integrate exactly this concept into this indicator as well. And let me show you how this works. I'm going to go back one more time to the settings. And there's a setting called base reference time frame, which basically tells the indicator, hey, instead of looking at the 5-minute chart, at the chart time frame, base yourself on a different time frame, maybe on the 30-minute time frame. And once done, the indicator will calculate these levels as if it were applied to the 30-minute time frame. And this becomes very handy because oftentimes the levels that you will see once we make this selection are much more significant, much more meaningful because they come from a higher time frame. Remember in the beginning I said, on the higher time frames, things tend to be clearer. So what this allows you to do is to time your trades, we're back to trade timing, based on these small time frames, yet consume the levels as if you were on a higher time frame. It just keeps your trading much simpler because there's no need anymore to have multiple charts open with multiple time frames. You can see it all on one single chart. So trading should be simple, and it can be simple if you have an indicator that supports this. And there's one more thing. All right, so going back one more time to my settings, and you can see there are many settings in here. I can't go through all of them, and we have master classes around this. So this is something I don't want to go into right now, but we have a setting called Setup Box, which, when enabled, basically shows you directly on the chart what is the trade idea, the setup at play right now in this moment for this symbol and time frame. You can see, for example, here we have a short bounce setup scenario, exactly as I mentioned before, where price is at this resistance area. There's problems penetrating it, and the play at work here is to potentially short this symbol in the anticipation that price will once again bounce off from this level and move towards the middle between support and resistance. And your stop loss would be somewhere around here, just above the resistance zone. So very, and one of my favorite trades, especially when some other conditions become true as well, which you're going to cover in a second. So the indicator will show you this here as well. All right, now let me switch symbols. Let's change it up a little bit, shall we? Okay, so let me change it up to MNQ. I'm going to stay with the futures for now. The NASDAQ futures. All right, so what do we have here? Okay, what do we see? Once again, we now see that our trade just updated. This all updates in real time. So as price moves, we may see different trade setups in our box here. But on MNQ, just recently, a very interesting phenomena, we have seen that price moved into the zone of support, or support zone here, as highlighted by the indicator. And as you may imagine, especially when accompanied with liquidity capture, it may bounce off from it. Because again, these are events when they happen near support where volume is abnormally high, preventing price from moving further down, and instead it is likely to bounce off. All right, and this is exactly what happened here. Price wasn't able to penetrate this support zone. You could have entered when price is in that zone, hoping that it will not move further down, put your stop loss just below here, and hope that price will bounce off instead. And this is exactly what just happened a couple of minutes ago. Now, I mentioned there's one more indicator which can help you fine-tune what you see. And this indicator is the perfect companion to what you see on the chart. Again, designed to just help you with the heavy lifting, with the tedious groundwork. This indicator is called MA Rush. Let me just enable it. And it shows you in which direction is my momentum pointing to. Is it rather bullish or is it rather bearish? You can see these labels here. So once this label prints and it is not replaced by a different label, in this case, it's bullish. You can see that the current momentum is bullish. And if you combine this information with the setup at play, so let's say you're down here in the support zone, you have bullish momentum, and you play as, hey, I'm betting on the fact that price will not be able to bounce to support. Instead, it will break through support. Instead, it will bounce off in the long direction, and we have bullish momentum. Now we have two things forecasting the same price move. In the world of trading, we call this confluence. And confluence can be, the difference maker between being a profitable trader or not being profitable, because it looks for multiple things to come together before you pull the trigger. So here we have bullish momentum. So basically telling us, hey, price is biased towards the long direction. And we have a setup here, the long bounce setup, which we just had, which bets on the fact, hey, price will not go further down. Instead, it will bounce off to the upside. Two things are coming together, which makes it more likely that this trade will actually play out. All right, so this is our MA Rush indicator. Let me give you some additional information about this real quick. So I'm going to go back to my slides just for a second. There we go. So MA Rush is an indicator which is very simple to use, an indicator designed to predict or to forecast the momentum of the future. Is it rather bearish, the price will continue or may continue to move further down, or is it rather bullish? This is all the indicator does. And we've even, created an experiment in our lab, in our research lab, where we only traded these labels on the chart. When we ever had a bearish label, we were going into a short trade. And then when this label was replaced by a bullish label, we would close the short trade and go long, and so forth and so forth. And just by trading these levels, for the most symbols that we tested it on, we were able to create a very profitable trading system simply by looking at these levels. But what we actually try to do in our trading room is we are simply using these levels as additional filters for the trades that we see with our liquidity IQ indicator. All right, so let me go back quickly to the chart one more time, just to show you how these levels work. I'm going to hide liquidity IQ. If we just zoom out a little bit, you can see that these levels, oftentimes, they're good areas to enter into a trade. Just by trading these, not all of them always work out. Of course, that's impossible. But oftentimes, you have a very nice follow through just by trading according to these levels. But what we advertise and how we promote those levels is to use those as additional filter for your trade setups that come in mind with liquidity IQ. All right, so let me change symbols one more time. This was a future symbol. Let's go to Bitcoin. Bitcoin futures. What do we have here? All right, so, oh, beautiful. Look at what just happened here. Actually, a very interesting setup. I talked in the beginning, maybe you don't remember anymore, but I said, we have our bounce setup. The price, moves towards a support zone and bounces off from it, or vice versa, it moves towards a resistance zone and bounces off from it. This is a great setup, but there's an even better setup, which I like personally even better. It's the retrace setup. And look what just happened here. We had a zone break back here. This was early on today, around midnight. This support zone was broken. Price moved down, and then it retraced back to this broken zone. You can see it here. So this broken support zone now acts as resistance. Move down, move down, move down, moved up. Where did it move to? Exactly to this level again, which once again acts as resistance. And price moves down again. And we just had it again. Price moved again to this level and couldn't penetrate it. This broken support level acting as resistance and now moved down again. And we also had a recent liquidity capture at this level. Bring our capture count, you can also see how many times did we have a liquidity capture at this level? 5 times. There's clearly some significance in that level. And actually, look at what happened here. This is a coincidence. It happened just around the 63,000 number mark, a psychological number. No wonder price has reacted to that level so strongly because it's psychological. All right, so this is Bitcoin. Let me change it up one more time. I'm going to go to Tesla. Let's go to stocks. All right, so what do we have in Tesla? Oh, Tesla, this happened today. This is, again, the 5-minute chart. We did have, when the market opened, I guess this morning, we had a big gap when it opened down. We opened much lower. We broke this level throughout the open, or overnight, actually. The price gap down. This support level was broken, but look what happened afterwards. Price moved up, so gaps are oftentimes tightened or even filled. But where did it move to? It moved exactly almost to the dot, to this broken level, and then retraced further down. Another retrace setup, where price came back up. A good opportunity for you to reshort Tesla and go further down. Or vice versa. You know, if you had this big gap down, oftentimes, especially when we see early signs that price is recovering, it's a good idea to actually place a long trade with your target being somewhere below this broken level. A high probability trade that, hey, we had this big gap. Gaps tend to be filled. Price may retrace. We know exactly where it may retrace to. A very powerful observation. All right. So this was Tesla. Now let's change it up completely. Let's go to, what should we go to? Let's just actually change the time frame a little bit. Let's talk about swing trading a little bit. Okay, so here we have Amazon. Completely different time frame. This is the 2-hour time frame. Much bigger time frame. And I have configured Liquidity IQ to actually take its level based on the daily time frame. So a setup geared towards swing trading. So this is everything we've seen before was for day trading. This is for swing trading now, because I know there are many swing traders out there as well. All right, so what do we see here? Well, Amazon has been in the news lately. I believe it made an all-time high. When was this? That was on Thursday last week, about a week ago. Made an all-time high. It has retraced since. But then look, after this retracement, when price came back up, where did it go up to? Well, big surprise. It went back up almost to the dot once again to this resistance level, which we knew about based on our indicator all the way back here. On Monday at 9:30 when the market opened, this level was printed. This is not printed after the fact. After we knew that price bounced down, we printed this level at 9:30 on Monday. We also had a liquidity capture event. When was this? This was on at 189.77 on this day here. On Tuesday, price wicked up into this level. Volume was abnormally high. And our interpretation would have been, hey, somebody is preventing Amazon from moving higher, at least for the moment, and price may retrace further down. Exactly, this is what happened here. So we had this initial retracement. Great. What else do we have? Let's go to Tesla. Back to Tesla, but this time from a swing trading point of view. So I'm going to go to Tesla on the 2-hour time frame with Liquidity IQ being configured to get its levels from the daily time frame. Okay, so what do we have here? This is actually a setup which you will find often. So oftentimes price is not right near these resistance zones or these support zones. Oftentimes price is actually somewhere in the middle. In this case, Tesla, so you can see it here, is right smack down the middle between resistance and support. And we have a trade setup for this scenario as well. We call this the magnet zone trade. I'm going to explain in a second why magnet. You can see it down here. This is the magnet zone setup. Now, with the magnet zone setup, all that you need to do, and I'm going to say all in air quotes, all that you need to figure out is to estimate to which level, either the resistance level on top or the support level below, to which level will price go next. Is it going up first or is it going down first? Well, typically it's a coin toss. If you just look at this like this, okay, we're right in the middle. Does it go up or down? Well, it's a 50-50 coin toss. But we actually can do better than this. We can use a bias, which will help us to push the odds a little bit in our favor. And this bias comes in from our MA rush indicator. Remember the indicator which prints these levels on the chart? Bullish or bearish? Let me just hide liquidity IQ. Let's just zoom out a little bit on this 2-hour chart. What do we see? Look at these levels. Bearish, price powered through down. Bullish, price went up. Bearish, down a lot. And just recently, a couple of days ago, we had a bullish signal on Tesla. And the way we advocate using these levels, I mean, you can do whatever you want. You can just trade those outright. But the way we trade them is to give us this additional bias, estimating where price will go next. So let's revisit this setup here. We are in the middle between support and resistance. But we just recently had this bullish signal on MA rush. This will tell us it is more likely that price will first visit or move towards this resistance zone on top instead of going down to the support zone. And you can formulate a trade around that. And the trade, how it would look like, is actually pointed out right here. So if you were to go into a long trade, then your target would be at 181.03, just below this resistance zone, somewhere here. Maybe 1 ATR below, or 0.5 times an ATR below. Your stop, in the worst case, would be all the way down here below the support zone at 157.29. It's very far away in this case, but there's some ways to further tighten your stop. You can, for example, put your stop below the swing low here, making it a bit tighter. But also show you, okay, with these targets and stop, this would be my reward risk. That's not ideal, 0.37, and so forth. So if you were to go long, you can see exactly where your target and stop would be and what would be your reward risk ratio. In this case, it would not be great at 0.37, but there are things that you can do to improve this. And of course, one obvious thing is, hey, if we know we want to go into a long trade, instead of entering right now at market, we wait for yet another retracement, which happen more often than you think. So enter perhaps by limit order, by limit order around this level here, maybe at 170, wait for price to come down. Hopefully it will then bounce off towards our resistance zone. We put our target perhaps somewhere below this level. This will further increase your reward risk ratio. There are some techniques that you can do to do that. All right. And one more example, KSS. And guys, if you have any symbols in mind, please put them into the chat. I'll be more than happy to revisit those levels. All right. So here is similar scenario where price is in between support and resistance. You can see it very clearly here. We have bearish momentum. MA rush is showing us a bearish signal. You can see it here. So what would this tell us? Well, since we're in between support and resistance, and we have this bearish bias, our trade idea would be, hey, it is more likely that price will revisit this support zone below here instead of going upwards towards this resistance zone. So this would be a short trade. And if we were to go short at the current market price, with a target of 21.79, just above the support zone, a stop loss of 26.26, just above this resistance zone, our reward risk ratio would be 0.86. But of course, we could always wait for a bit of an extra retracement, Maybe perhaps price retraces to this level here, 24.50 maybe, which will further improve our reward risk. And then the anticipation is that price will continue moving downwards to this support zone. All right. Okay, so we're going to come back to the charts in just a bit, but let me go back to my slides to explain to you how you can get hold of this indicator. All right, so back onto my slides, if I can find them. There we go. Okay, perfect. So we've talked about liquidity IQ and MA Rush, and we use those two indicators in combination all the time. For our own trading, for our own live trading workshops, when we discuss market setups, for everything, basically, we use Liquidity IQ and MA Rush together. And we call these the dynamic duo because they work so nicely together. And both indicators, when used properly and configured properly, will do most of the heavy lifting for you. And believe me, this is so important because that way you don't need to spend your energy, your time on these tedious things, on the technical analysis. The indicators will do it for you, and you can focus your energy on what really matters, putting the final trigger. All right. Now, these indicators are available for a variety of platforms. So we have them for TradingView, obviously, but we also have them for NinjaTrader, for Motivway, for MT4, MetaTrader 5, and Thinkorswim. So all major platforms and other platforms are on the works right now. Normally, just Liquidity IQ, if you just buy it outright, just the individual indicator has a ticket price of $1,297. But you know what? As a big thank you for being here, for listening to me talk, spending your time with us today, we have worked out a special package for you. We call this the Liquidity IQ Super Package. It will, of course, include our Liquidity IQ indicator over there. But we're going to supplement this with 6 bonuses. And bonus number 1, I guess you could probably guess it, is our MA Rush indicator because it works so nicely together with Liquidity IQ. And of course, everything here is for life. So you never have to pay a single penny again. But it doesn't stop there. We're also going to throw in exclusive access to our next live trading workshop scheduled for May 29th, where we will trade the market open using our own money, real money, no demo accounts, using Liquidity IQ and MA Rush. So this is really where the rubber hits the road and where we put, our money where our mouth is and trade live using these indicators. If you want to observe how we do it, how we look at the markets, how we discuss setups, which setups we prefer in certain situations, join us for this live trading workshop to which you will be invited to. You will also be invited for a full year to exclusive members-only trading sessions and live market sessions, which take place every single Tuesday at 12 p.m. Eastern. And of course, these are all recorded should you not be able to make it. And you will also be invited to our members-only Discord channel, where you get instant support from our team. If you have any questions, we can learn about trade setups, about tips and tricks, about how to configure certain things, and so forth. So you're going to also be invited to this. And we're going to supplement this whole thing with an ebook on MA Rush and 2 video guides on how to trade with Liquidity IQ and MA Rush together. So all this added up, it's a value of around $3,000, but today you will get this whole thing for only $997. And if you want to take advantage of this offer, all you need to do is to go to tradingindicators.com/zone. And zone because, the indicator, Liquidity IQ will find you these zones on the chart, which make trading so much easier. So tradingindicators.com/zone. And just a quick recap, you're going to get, it is limited to the first couple of buyers. And you will get in this package our Liquidity IQ indicator here. You will also get our MA Rush indicator, of course, as mentioned before, which has these awesome bear and bull labels on the chart, which you can trade just by yourself. just as a standalone trading system as you wish, but we recommend that you trade it in combination with Liquidity IQ. You will get access to our exclusive members trading sessions, which take place every single Tuesday at 12 p.m. Eastern. You'll be invited for those, and the next one is already scheduled for May 14th, of course, next week on Tuesday. You'll get access to our Discord channel, the members only part where you can learn tips and tricks and where you can get instant support for anything that you're interested in. And just this morning, and this is just a coincidence, we had a post in our Discord channel by a trader called Klaus. He's from Scandinavia, I believe. He just purchased this package, which we offered to our group yesterday. He purchased it yesterday, and he wrote the following. Quite a cool story, actually. So he said, last night, I decided on buying the Liquidity IQ Super Package, exactly this package. I was not very patient, and as soon as I got the welcome email with links on how to use the indicator, I spent about 2 hours getting to know how this should work. Morning came, and time to trade. So this was this morning, and I've been trading for many years and was not afraid to start in a live account right from the start. First trade paid $545 in a little over 30 minutes. I was trading the London session, so things are moving slowly. And this is the screenshot he sent. And look at which trade he traded. It's an awesome trade where price, this is the NQ, the NASDAQ futures on the 5-minute time frame. Price approached this resistance level here, and Klaus decided, hey, I'm going to short this trade. My anticipation is that price will not be able to penetrate resistance to the upside. So he shorted this trade, put his stop loss, you can see it here, just above this resistance level, in anticipation that price will not move further up, but instead bounce further down. And I guess then he hit his target at 545 at this level here. A beautiful trade. It's the bounce trade that we teach all the time, where price is approaching either resistance or support and will not be able to bounce through it. Instead, it will move towards the middle in between support and resistance. And look here, you could have done the same trade earlier overnight for the support level. Price approached support with a beautiful set of 2 liquidity captures, this one here, and there's one here, it's a bit hard to see, what's written out here. And then price was not able to penetrate support. Instead, it bounced off to the upside and then moved towards this resistance level. And just by looking at this, you can imagine how much trading can be simplified just by looking at these levels, if you're aware of these levels and how to trade with them. All right. Okay, back to the offer. You will also be invited to our next live trading workshop. This is a workshop around 1.5 hours, maybe 2 hours, where we trade the market open. We start at 9 a.m. Now we look at setups until the market opens. The cash open is at 9:30. And then we place trade using our live account. So you can learn firsthand how we look at the market using our 2 indicators, Liquidity IQ and ME-Rush. So the next one is scheduled for May 29, and you will be invited to this session as well. All right, and all you need to do is to go to TradingIndicators.com/zone. All right, so here's the offer. Guys, think about it. We'll be more than happy to welcome you to our trading community. And I mentioned at the very beginning, trading is indeed a team activity, and a trader should not be alone. And with us, you will not be alone, because you're going to join our community, you're going to join our member sessions, our Discord channel, and you get all the support that you need to get started with your trading journey using these 2 very innovative indicators. All right. Okay, so now I talked a lot. Let me see if there are any questions. All right, so let's see what we have here. Okay, so as Claudia was wondering, is there a money back guarantee? And the answer is yeah, for most platforms, except for Thinkorswim, we do offer a 7-day money back guarantee. Yes. Norman wants to know, can you look at Netflix? Yes, let's look at Netflix. Norman, which time frame do you have in mind? So I'm going to wait for the time frame, but let me switch over to my charts and let's open up Netflix. And I believe probably from a swing trading point of view. So Netflix. All right. Let's see what happens. And we do this all the time. We do this kind of live charting analysis all the time. So, okay, for Netflix. Yeah, we are right in the middle, once again, in between support and resistance of Netflix. Price has been consolidating a bit. Let me just zoom out a little bit. Yeah, we had this big move up in Netflix, a beautiful zone break. This level here, price then moved further higher and higher. I believe probably all made all-time highs. Since then, price has retraced and now it found support around this area. And now we are in between support and resistance. Our MA rush bias right now is bearish. You can see it here. It is bearish momentum. But, you know, price is somewhat in the middle between support and resistance, but towards the upside. I would be hesitant to potentially short this stock based on the fact that Netflix has been so bullish in recent history, and any short play would be, if anything, rather short-lived. So here we have the overall bias of this huge move. So we had this big bearish move of MA Rush. Look at this. If you just look at MA Rush, just these signals here, bearish, and this huge move up. And MA Rush didn't change momentum. This came in, when did it come in? October last year. And we didn't change momentum, our outlook, until I guess earnings came in. When was this? In April, mid-April last month, where we had this big gap down. But you know, after a big gap, what did I just say? What did I say in the beginning? Gaps oftentimes get filled, and we just had the gap fill right now. And I think it would be dangerous to bet on a short play here for Netflix, even though, you know, a purist would say, hey, we have bearish momentum. Chances are price may revisit the support zone down here instead of going further to this resistance zone. But since Netflix was so bullish, our gap was filled after the earnings. I mean, I would be hesitant to go short here again. I would estimate it's likely to continue towards this resistance zone. And if you have a zone break here of this level, it's not unlikely that we see another powerful move after the zone break towards a higher level. All right, so let me see, what else do we have? David wants to know, will these indicators be available for wealth charts soon? So David, this is something we are currently working on. It depends a little bit on wealth chart and what this platform is capable of, because what's happening behind the scenes is actually quite complex. We do something, and we use AI technology for this, which is called multi-time frame fusion, where the indicator will take information from multiple time frames, levels of multiple time frames, and then fuse this information together into one consolidated picture. So whether this kind of multi-time frame analysis is possible on wealth charts remains yet to be seen. All right. Okay. Dance with Bears wants to know that he would like to get one of our other indicators, Super Trend Bullseye. Yes, and he has problems signing the platform. Please send me an email afterwards. I'm going to share my contact information, and I'll let you know which platform I would recommend and how you can get hold of this other indicator. All right. Okay. AMC and Uber. Okay. And both have earnings tomorrow. Okay. Dancing with Bears likes to take it risky. So let's just see what these levels are. So personally, I would not trade into the earnings because you never know what's going to happen. In these earnings, I would stay away until after the earnings report is out and then look at what the levels say. But if earnings were not happening tomorrow, at least for AMC here, we can clearly see that we are in between support and resistance. The trade at play here is a magnet zone trade, which basically requires you as a trader to estimate to which level price will go next. And we use MA Rush to give us this bias. So MA Rush is bearish. You can see it here. So here the estimation would be, hey, price is likely to move towards the support level instead of going further up. And you can see the target and the stop right here and your risk reward as well. And I like the setup. I like the fact that AMC has been, so bearish lately. And it's not unlikely that price will continue to go down, but the fact that we have earnings tomorrow, I personally would not engage into any trades right now. I'd wait until the earnings are published and then look at these levels again. All right. So what about Uber? Uber was another symbol. All right. And David, I'm not sure how much longer you give me. This is a beautiful one. Actually, I'm glad that you brought this up.
You have a few minutes left.
Okay, cool. Okay, so here, Uber, and look what just happened here. And, it may sound like a broken record, but we had this beautiful zone break. Support was broken. We had bearish momentum. And then after the zone break, we had this retracement. And guess where price retraced to? Exactly to this broken zone once again. So support, the broken support now acts as resistance, and with a beautiful bounce of that level towards the short side. And if you see this kind of setup, a retracement setup towards a broken zone, and you have Mirage showing you a bearish signal. This is one of my all-time favorites because this has really stuck everything in your favor. It's a trade where you have great reward risk because your stop loss will be just above this level here, and a great downside potential. So a great trade setup. So I really like it. We're too late to this game now. But if we had seen this setup, a couple of days ago, this would have been an amazing setup to trade. All right. Okay. Scanning. Yes, that's a great question. So question came in, can we scan for these setups? The answer is, it depends. It depends on whether the trading platform supports scanning. So if I go back to the offering here, so we offer this package for, I believe, 6 different platforms. TradingView, Thinkorswim, NinjaTrader, MotiveWave, MT4, and MT5, 6 platforms. So of these 6 platforms, only NinjaTrader, and MotiveWave, and Thinkorswim have built-in scanners. And of these 3, scanning is only possible with NinjaTrader and MotiveWave. And the reason for this is because, all the other platforms don't have a scanner, or in case of TOS, which comes with a scanner, but the scanner does not support multi-time frame scanning. So therefore, our indicators, which are multi-time frame based, cannot be scanned for. But at least if you have NinjaTrader or MotiveWave being a great platform, by the way, if you don't know this platform yet, let me just go back real quick to the list of platforms. Here we go. It's this platform here. It's an amazing platform, very innovative. So you may want to check it out. Our indicators work great on the platform. But yeah, if you have Ninja or MotiveWave, you can scan for these setups. And it's actually something we do all the time because we have access, of course, to all these platforms. All right. Okay. Yeah, and one user came in, MotiveWave has great drawing tools. Yes, it's a pretty cool platform. All right, guys. So I think that's pretty much it. Think about it. If you want to come on board, we'll be happy to greet you today. This is a limited time offer. We have to limit our participants to these live trading workshops and member sessions because we want to keep those as private and as personal as possible. So think about it. If you want to come on board, you're more than welcome to. This is a lifetime offer. You get everything for life and for only $9.97 as a special bundle price. And one last thing, if you had a question perhaps which was not answered today, what you can do is to simply go to our homepage, TradingIndicators.com. We have a contact item in the main menu on top. Simply go there, send us a message, and this message will go straight to my inbox, and I will get back to every single message and question that you have. So I promise you that. All right, guys, so that's it from my side. David, please take it away. Thanks, guys, for listening. It's been fun.